Hello everyone, I hope you guys are having a great weekend. I do believe we get a bearish move in the market sometime this week. I was very adamant about getting a bearish move. We went short on Friday, and I think next week is going to be a time where we get a nice little pullback. Too many people are bullish. It makes the most sense to get a nice, simple little pullback and a continued move upwards into summer. All right, so we're going to go ahead and take a look at what the next steps are for the market. We're going to take a look at the SP 500, the NASDAQ, the Russell, the VIX, the dollar, all that good stuff. Without further ado, let's get started with the video. All right, first and foremost, this is the daily chart of the SPX. We've got a crazy little rising wedge being formed here. And rising wedges are generally bearish patterns. So as we can see here, we are at a resistance level on this rising wedge. I don't think that we get above 6,000. I think that we drop before we get to 6,000. And we should get a bit of a pullback. A nice, simple little pullback would be really good. 2 to 3% would be ideal, in my opinion. What we did see, even on the S&P 500 in the after hours, was a decent pullback. If this wants to load and everything, can't really see it, but give me 1 second. There we go. Okay, so this is a chart of the ES. So we started to get a bit of a pullback. Thankfully, we were short on Friday. We're still holding shorts, and I'm expecting a bit of a pullback. This is just the beginning. This is just the beginning, in my opinion. It would be very nice. So the reason why on Thursday I posted that things were going to get a bit of a pullback was primarily we were looking at the large tech stocks. The large tech stocks and tech in general, the weakness in tech was starting to show, and it was starting to show cracks. So let's go ahead and take a look at the daily time frame of these stocks. So what we were doing is we were looking at Tesla, NVDA, the chips, etc. Right? Before we even, this is something that I drew out. Okay, so this is a chart of Tesla. I drew this out. What I expected to happen on Thursday, I expected a bit of a bounce and then a pullback. So far, it looks like that's what's occurring at the moment. NVIDIA, bounce and then a pullback. AMD, bounce, pullback. So the reason why I thought there was going to be a pullback is because, number one, these chip stocks are very far overextended to the upside. When they are very far overextended like this, it means that the move to the upside cannot sustain itself. If the move to the upside cannot sustain itself, what happens? We get a pullback. So because these winning stocks, AMD, NVIDIA, Tesla, had huge moves to the upside, this cannot sustain itself. These moves are not going to hold well. Because they're not going to hold well, the S&P 500 and the NASDAQ are also not going to hold well. So, so far, these are creating bear flags. AMD is creating a bear flag. NVIDIA, Microsoft. Microsoft is another one that I was trying to show. When you see movement to the upside like this, small, stagnated, just ant-like little steps to the upside, that is not sustainable. There generally needs to be some sort of weakness and a pullback, because Microsoft just didn't look great, right? Like, this is just not a really strong bullish setup. What tends to happen is this is more of a coin flip. But when you look at NVIDIA, AMD, Tesla, Amazon, like, these are not bullish, sustainable moves, in my opinion. And we could also take a look at Google. Google was trying to do its thing. Netflix is also very strong, you know, but just the majority of these tech stocks, also Apple, showing resistance. The majority of these tech stocks are not showing continuous, complete strength. Because they're not showing continuous, complete strength, how would a move in the S&P 500, the NASDAQ, how would a move in these large indices sustain themselves when the largest movers, when the largest tech stocks cannot sustain a move to the upside? Does that make sense? So That's essentially what my thought process was. It just like I was expecting. So currently, I'm still expecting a move on the NASDAQ below 510. Even 500 would be really, really nice. How much of a percentage move would that be to the downside? To 510, nice little 2% drop. Very, very doable. Very, very doable. We're holding on to 519 puts on the NASDAQ and 590 puts on the S&P 500. Both of those hopefully are going to do very, very well when they open up on Monday, hopefully. But then I expect to see some more follow through to the downside. This, once again, at the bare minimum, this trend line on the NASDAQ should be getting retested. And how much of a percentage is that away? Currently, that is going to be about 1% away. That is still also very doable. And this trend line, once again, I've been showing it multiple times. This has acted as resistance, and then it has acted as support over here, and then resistance again. Once we got this breakdown to the downside, it just capitulated lower, etc., etc. And then the timeline here is that we ended up going long down here. We remain bullish, and now things are starting to get very far overextended. The large tech stocks are starting to get very, very overextended, and it just makes the most sense to get a bit of a pullback. We have OPEX week. We have options expiring this week on Friday. We have just the best case scenario is a bit of a pullback to this trend line. Even a bit lower, to be honest, below 510, even 500, this area would be sustainable for a continued move to the upside. Does this look something like this? Let's just clean the chart up. Right? Let's just look at the chart of the NQ futures. A move like this, just straight up, is this something that is sustainable? I don't think so. And it just does not. In what world would this be a time to be aggressively long? Never. Any sort of time where we get extreme strength is not the time to start being extremely bullish. You want to look to buy into weakness, into pullbacks at levels of support. You don't want to go aggressively long into levels of resistance. So just purely based off of this is getting to a point where it needs to get a pullback. Next, the VIX. So the VIX, we also take a look at the VIX because the VIX shows an inverse relationship to the market. Obviously, the VIX, so once again, inverse relationship to the market. What does that mean? When the VIX is falling, that means the overall market is rising, right? So now $20 on the VIX, major level. Trading below 20 right now, great. I mean, it's bullish for the market. If the VIX starts to bounce, and I do think that we end up bouncing because $17 was a prior major level of support on the VIX. You could see here, back in at the end of March, right here, we're literally at support on the VIX. The VIX should be bouncing. If the VIX bounces, so if the VIX rises, what happens to the market? The market should be falling. So with that being said, it is just the best case scenario for everyone. It's the best case scenario for bulls to take some profits on their longs. It's the best case scenario for bears to finally try to short something. But here's the thing. Here's another thing. The vast majority of people are always on the wrong side of the market. Always on the wrong side of the market. The vast majority of people are most likely going to be trying to go long and be bullish up here. Because they tried to... Nobody was thinking to be bullish down here, except us. Nobody was thinking to be bullish up here. At every instance here, people were trying to look to go short at levels of resistance. Now that we are starting to show extreme strength, this is the time where the vast majority of people become very, very bullish. Because the vast majority of people are starting to become very, very bullish here, terrible time to go long, because the market makers are already showing their hand. This, in my opinion, is going to be a very, very big bull trap, and we should get a bit of a pullback. And with that being said, so far in the after hours, it's already working, but it's too early to tell. Sunday night, Monday morning, things can still change, but I'm telling you guys, that is my thought process for all of those reasons. Tech stocks are starting to show some weakness. The VIX is at a level of support. With the VIX bouncing, it's going to show weakness in the overall market. This is a rising wedge on the S&P 500. And it just makes the most sense. Too many people are starting to become bullish up here. And you want to generally do the opposite of what people are doing as a whole. Okay, so keep this in mind. I really, really would be very, very careful about being aggressively long this week, because we should be getting a bit of a pullback. Now, if you guys want exactly what I'm doing, my thought process for everything, my trades, my swing trades, my day trades, everything, you get a free trial down below in the link. If you guys want access, click the link down below. You guys gain access to everything, and you guys gain access to my swing trades. That in and of itself, you don't even need the day trades. I have a ridiculously high success rate so far for the year, and the proof is in the pudding. Every single trade, every single buy and sell, I posted in the Discord. So far for the month of April, we've been completely successful. For the month of May as well, we have been doing phenomenally, and the proof is in the pudding. It is what it is. So far, so good. And we're just going to continue doing well. So if you guys want access to that, the link to join is down below. If you guys have any questions or concerns or anything that I could help with that you guys would want me to make a video on, or if there's anything that I could help with, please drop a comment below. I would love to help. And with that being said, just be bearish. Okay, in my opinion, just be bearish next week. Look for dips to buy for longer term, but be very, very careful about being aggressively long in the short term. Okay, hope you guys have a wonderful rest of your weekend. Take care. Love you guys.